Recent data released by the Central Bank of Nigeria indicates that Nigeria attracted a sum of 698.78 million US dollars as foreign direct investment in 2021, representing its lowest level on record. This is according to the Central Bank of Nigeria. A year-on-year comparison shows that FDIs into the country dipped by 32% in 2021 to $698.8 million when compared to the previous year of $1.03 billion. Well, this also represents the fourth time Nigeria has recorded foreign direct investment below $1 billion in 15 years. Well, the first time was in 2010, following the backdrop of the 2008 global financial crisis, which saw Nigeria's direct investment inflow drop from $3.33 billion recorded in 2009 to $728.9 million in 2010. So it's also fell below the $1 billion mark in 2017, 2019, and then 2021. Well, the recent drop in FDIs could be attributed, according to the CBN, to the ripple effect of the COVID-19 pandemic on the Nigerian economy, which resulted in a contraction of the economy and contingent of downturns on the macro level. Well, according to most analysts, there are other factors. So let's get talking in a moment, shall we now? Mr. Segun Lemo is the Executive Director of Paradigm Leadership Support Initiative. He joins us now via Zoom call. Thank you for joining us, Mr. Lemo. We appreciate your time.
Yeah, thank you for having me.
Okay, so let's. What do you make of this latest report? This is from the Central Bank of Nigeria, who we saw this figure drop from about $1 billion a year ago to just about above $500 million. What do you make of it?
I think it's reflective of the state of the economy. Even local investments are dropping, not to talk of foreign investments. There are different factors playing out, are not supporting growth. For instance, you look at the level of security in the country. So if Nigerians are not even confident of putting their money in the system, to invest in the system, then how do you then encourage foreigners or even people in diaspora to bring money, to bring inflow into the country? And I think there are other issues that have also affected, I would say the inconsistency in the monetary policy direction of government, of course, as regulated by the central bank, has also affected in some way. So I mean, we need to build the confidence of an average investor, whether local investor or foreign investor, and the government itself need to provide an enabling environment to ensure that when you bring your capital to invest in the country, you are assured of returns, and they would likely that your capital is secure. And there are factors to consider in that regard, and I've mentioned one of those factors: security, for instance, and then again the business environment. I think by and large is that, for instance, if you look at the like you mentioned, we've had the highest in 2008 when we had about $4.6 billion, or a little bit above that benchmark. But having something below $1 billion now, you could say, for instance, the impact of COVID-19 and the fact that the global economy is just recovering from that. As such, they will see a gradual increase in terms of investment, whether local or foreign. So we expect that things will continue to adjust as we move on, and as countries, of course, particularly Nigeria, also recover. But I think more importantly is that local factors affecting investment needs to be addressed.
Okay. Just before we get to talk more about the local factors and then how to address some of these factors, let's talk more on a direct impact on the Nigerian economy vis-a-vis the fact that we need to grow the economy. And when you also look at the projections that has been made by different financial institutions, global institutions like World Bank and IMF, it seems that we have a lot to do as regards the Nigeria economy this year in terms of growth and sustainability.
Absolutely, absolutely. Yeah, I think. Well, you could say, for instance, the GDP numbers, the latest one, is in the direction that the federal government projected. But I don't know whether that's sustainable, whether that is going to continue. Yes, the World Bank gave their own indication of what the GDP growth might look like in 2022, and I know IMF has also given its own indication. But I think, there is a general consensus. And when the IMF presented its own economic outlook in Lagos, I think last, November or thereabout, there was a general, consensus that we need to address, leakages that are affecting growth, corruption issues, and the corruption perception index also points to that direction. So we need to, because all of that feeds into what we are going to experience at the end of the day as growth. So if we don't address some of those local factors that are impeding growth, then we will not be able to even improve the confidence of an average investor to be able to bring the money into the system. For instance, if you're in the diaspora, if you're a foreign investor, and you want to invest in Nigeria, yes, we make all this noise about Nigeria being the destination for investment, and I think the federal government through the vice president, Professor Yemi Osinbajo, continuing on that campaign that people should come and invest in Nigeria. But what is the investment environment like in Nigeria? When you even bring your capital into the country, how secure is your capital, and then what return are you going to expect? If you don't, because for you to be able to build the confidence of an average private sector player, you need to to be sure that government doesn't have a hold on as such on the economy, and then the market is free for everybody
let me quickly come in here. Let me quickly come in here. What do you think are the direct consequences on the economy, and given the fact that we have these projections that they are already on the table, and so we have to get to work, no doubt about that. But in terms of implication, direct implications on our own economy here,
of course, if foreign investment shrinks, definitely it will also limit disposable income to people, because I'll give you a typical example, is that how much of the workforce in the country right now are currently employed on government payroll. So you depend on the private sector for you to be able to keep people employed. Now, if there is limits to capture inflow, which means that there will be limits to investments in the country, then absolutely there will also be constraint on disposable income on the average Nigerian. So I think that, and then again, is that it will have ripple effects on other sectors of the economy. It means that what ordinarily citizens will be able to buy in reflating the economy and growing the economy, they won't be able to do that, which means that monies will not exchange hands as it should be in a normal economy, because when people don't have enough disposable income, then it means that you can't be able to transfer money from one person to another, or from one sector to another, and then because those are the things that contribute to economic growth. When there's a flow of cash moving around from one person to another, and people are able to exchange economic activities for cash and things like that. So, but if that's when people have disposable income, and when their income is increasing, and then the economy is sort of stabilized, and people, and of course you will also experience that in the number of jobs that will be created. You will also experience that in how many people are employed. You will also experience that in different strata of the economy. So if there is a shrink, for instance, in investment inflow, it's suddenly going to, trickle down to every other part, of the economy.
Point made quickly. Let's look at some of these factors you've raised earlier. You talk about the insecurity. Of course, the insecurity has been with us here, and the government says they've been on top of their toes to address it. How close are we to addressing some of these issues? Insecurity is there. You talk about infrastructure like power, and of course, the movement around the country and all of that as regards infrastructure, road infrastructure, rail infrastructure, and all of that. How soon are we close to addressing some of these issues that you've laid on the table?
Well, I think that it's going to, yes, we're moving, well, but I would say at snail speed, because we really need to ramp up all of these gaps that we are currently experiencing, which on the one hand is also affecting growth, impeding capital inflow into the country. If we don't address, yes, government says that, the security dynamics has changed from when we used to have bombings going off every day, or virtually every day, to now where we're having another dimension to the insecurity issue, where we're having banditry, kidnapping, and stuff like that. Government says that it has dealt with one part of the insecurity, and that what we're experiencing is another kind of insecurity entirely, which it is dealing with. But the truth is that, economy will not wait for you to deal entirely with security. It would start to react almost immediately, and that's what we're experiencing with now FDI, dropping. You could say that the impact of COVID-19, everybody can always, make a case, for that COVID-19 affected and all of that. And it's not just Nigeria, I think globally. But economies are recovering. So if we're not experiencing recovery in terms of FDI in Nigeria as well, we need to look inwards and know what exactly we are doing right. And then again is that the other part that you mentioned about infrastructure, roads and rail and power. I think the power situation in the country right now, I would say that it's a mess. It's a mess really if we haven't been able to generate our own power in a country that produces gas at this level, at this quantum, and we're still struggling to generate electricity. I think it's a mess, and we should really be ashamed of that. But then again, that goes to the policymakers, and they need to do something about that, as quickly as possible, because that also has its impact on foreign direct investment. If you're going to bring your money into a country where you are going to spend, all your recurrent spending will be in providing, your own electricity to be able to run whether your factory or whatever it is you're going to invest in the country. I think government needs to look at that. Again, is that movement of goods and services, yes, is improving, but we need to do much more, and we need to accelerate whatever it is we're doing in this regard. Yes, it will require money, but I think more importantly is that we need to be prudent in how we spend whatever it is we're borrowing. Yeah, people have issues about whether we should borrow or whether we should not borrow. With the state of the economy right now, we have to borrow, but we have to be responsible in our borrowing, and we have to be prudent in utilizing whatever it is that we borrow.
But talking about borrowing, yes, a moment. Talking about borrowing, some experts have said the debate or the argument is whether the borrowing level is sustainable. If you look at the revenue the government is generating vis-a-vis what you're borrowing and what you're spending, they are not at par at all. You think we have not exceed our sustainability level in terms of borrowing?
Well, it's a context issue. It's a context issue. If you look at debt to GDP, government always make a case for that we are still within limit. But if you look at debt to revenue mobilization, I think it's a disaster currently. So, like I said, it's a context issue. In whichever direction you look at it, I think what is most responsible. Yes, even countries that make so much money, even countries that are how do I put it now? Even countries that are more stabilized than Nigeria still go ahead and borrow. It depends on the objective and the goals of each administration and each country. Whatever it is you want to invest in, it will at some point require you to borrow money. I think what is most important is that you borrow responsibly, and you look at what your capacity it is to repay whatever it is you are borrowing. In terms of how
just a moment.
How you're able to utilize revenue.
Your point taken there. Just a moment. Just before I allow you go, let's talk about, yes, this foreign direct investment, even though it's declining, but a chunk of it seems to be favoring the ICT sector, the technology sector, much more than the other sectors as well. Which of these sectors would you say that we need to look at and concentrate? Because if you look at some technology platform like OPay, Flutterwave, and all of the other technology startups, report shows that they attracted more of this foreign direct investment directly than other sectors as well. So quickly, in 1 minute, which other sectors do you think we should be looking at going forward?
I think we should look at the agricultural value chain. We should look at something in that regard. Yeah, we have so much potential in that aspect, and we should look at growing that. And we need to convince both diaspora investors and and local investors to see how they can put some capital in that, improve the agricultural value chain, and help us to produce turn out products that are actually of value that we can export and earn more in our foreign exchange. Also, I think we need to look at manufacturing. I think those two areas will be some priority areas that we need to concentrate.